Hi, good morning, good afternoon, and good evening to all of you. Now we can start our discussion with respect to the income from other sources chapter. No need to refer the entire chapter. Just we have two amendments in this chapter. The two amendments are enough for writing the your examinations. Now I will tell you. So buyback amendment is there in our assessment of various entities. I think you know. Just I am opening the assessment of various entities related chapter. Listen carefully. Within 10 minutes we can close this entire discussion. Listen. Section 115 QA buyback of shares and securities concept we have. Yes. So how to tax the buyback? Sir, buyback of shares we have, and as well as buyback of securities also we have. In which concept we have an amendment? I think all of you already know. Yes. In which concept we have amendment? Buyback of shares we have an amendment. Securities related there is no change ma. Now, if buyback of shares done by the domestic company, we have to check, or if it is done by the foreign company, we have to check. Domestic company either listed also okay, unlisted also okay. Now, so what is the position before 1/10/2024? Sir, on these buyback related, who are required to pay the tax? Company. Example, yes ma, company distributed 150 per share to that shareholder at the time of buyback. At the time of issue, they received 100 rupees only. What is the distributed amount to the shareholder? Yes, 50 rupees per share. On this 50 rupees, yes, they are required to pay the tax at the rate of 23.296. Very, very important rate. You have to remember 23.296. Now, in the hands of shareholder, it is exempt under section 10 subsection 34 capital A. What is the position? On or after 1/10/2024, they made an amendment. No need to pay any tax by the company. Yes, in the hands of shareholder, that is treated as dividend. Nothing but deemed dividend under section 2, subsection 22, class F. So, that is directly taxable, no deduction available against that income. Whatever the distributed amount or whatever that amount received by the shareholder at the time of buyback, that is taxed in the hands of shareholder under deemed dividend under income from other sources. Now, because of this, we have an amendment in the deemed dividend. So previously we have a deemed dividend section 2 subsection 22 capital A2 yes E only. Now they introduce section 2 subsection 22 class F. So in case of foreign company, if foreign company done the buyback, yes, in the hands of company no need to pay any, in the hands of company not taxable, but in the hands of shareholder we are required to calculate the capital gain under section 46A. What about buyback of securities? Securities done, buyback of securities done by foreign company or domestic company, whatever it may be, in the hands of company that is not taxable, in the hands of shareholder that is taxable under section 46A under the head capital gain. Remember, amendment is done only with respect to buyback of shares, that too in the hands of domestic company. What is that date? You have to remember 1/10/2024. Before we have this treatment, on or after that date, if buyback done, we have to follow this treatment. So now we have to open the yes income from other sources directly deemed dividend concept. Yes. They are introduced the one new section, section 2, subsection 22, class F. Can you tell me what is that amendment on or after 1/10/2024? Any money paid by the domestic company for buyback of shares, whether it is an listed company or unlisted company, whatever that amount is paid, that is directly treated as dividend income in the hands of shareholders and it will taxed accordingly. And already we know no deductions are allowed against this income. Sir, for better understanding, I will give you one example. Yes, we can discuss this example in detailed manner. Listen carefully. Okay. We can write it down also. We can write it down also. Okay. Sir, in 2020, Mr. B purchased 100 shares, each share 40 rupees. Total cost of acquisition is nothing but how much, ma? 4,000 rupees. Just I will write down the facts again. Just in 2020, they are not given the month, okay? In 2020, Mr. B purchased how many shares from the company? Rupees 40 per share, like how many shares, ma? 100 shares. So total cost of acquisition is nothing but rupees 4,000. It isn't already done. Now what happened? In November 2024, can you tell me? On or after 1/10/2024, buyback done. How many shares? Total shares are 60 per share. How many shares buyback? Only 20 shares. Only 20 shares buyback done. In which month? Yes, you can check it out. In November 2024. Yes, just 20 shares buyback done. 20 shares only buyback done. At the rate of each share, can you tell me how much, ma? 60. Now you have to observe in the hands of Mr. B. Yes, we have to create that income under the head income from other sources, that is deemed income under section 2 subsection 22 class F. How much amount? Yes, how much amount, ma? Yes, remember 20 shares into each share is rupees 60. Yes, that is nothing but 1200 rupees taxable under income from other sources. In the same way, we have to calculate the capital gain or capital loss. Definitely now we can get the capital loss only. Why? Sale consideration, we are not get anything. But minus what is that cost of acquisition we got here? Yes, 20 shares only. These 20 shares, yes, here buyback done for 20 shares. Ma. That's why we have to take only 20. But what is the cost related to 20 shares, ma? 40 rupees. So that means 800 here we have a loss. So definitely this loss I can represent it as a long-term capital loss. So there is no other long-term capital gain now. So that's why it can be carry forward to the next assessment years, or if any long-term capital gain is there, we can set off this long-term capital loss. So remember, on the occasion of buyback, you have to create the deemed dividend as well as you have to calculate capital loss. Obviously, we can get the capital loss only. Here, shares purchased in 2020 and buyback done in 24. That's why long-term capital loss. Next facts what they are given. Sir, in December 2025, yes, next year's, yes, what happened, ma? In December 2025, Hero, yes, Mr. B sold 50 shares for 70 rupees each. Sold how many shares, ma? 50 shares at the rate of rupees 70 per share. Now we are required to calculate the capital gain in this year is capital asset sold. Sale consideration 50 into 70 per share. Can you tell me what is the sale consideration, ma? 50 into 70. I think we have here. Yes, that is an, no, they are not given. 50 into 70, 3,500 we got. This is in sale consideration. Minus cost of acquisition. Yes, we can't take indexation here. Yes, because transfer is done. Yes, of on or after 23/7/2024. Remember, yes, 50 shares cost 40 rupees per share. Is transferred only 50 shares. That's why. Yes, that is 50 into 40, 2,000. Definitely, long-term capital gain, we have, yes, 1,500. But remember, earlier year at the time of buyback, it is 24/25. It is 25/26. Remember, now we can set off earlier year long-term capital loss, that is 800. Now we are required to pay the tax only on 700. Are you clear up to now? So what is the point here? Remember, deemed dividend new section introduced because of buyback amendment. Sir, here buyback proceeds directly taxed in the hands of shareholder under income from other sources as deemed dividend. So that's okay. But at the same time, you have to calculate the capital gain under section 46 capital A. But here we are getting capital loss. No problem. That capital loss we can set off against the any other capital gains. Here long-term capital loss we can set off against the long-term capital gain. But in this year data, in this year he don't have any long-term capital gain. Next year he sold some shares. Now we can utilize this loss against the next year's gains. Are you clear? So this is only one amendment they clearly given in the income from other sources. Now one more amendment is also there. Yes, answer matched, you can verify. Please remember this date. Before that we have an, yes, company required to pay the tax on distributed amount. On or after this date, who required to pay the tax? Shareholder under income from other sources, deemed dividend. Yes, up to now we have these 5 sections like deemed dividend only. Now they introduced this new section. And one more amendment we have. Yes, I will tell you. Sir, in income from other sources, we can take these as an deductions. First deduction, family pension. In this, we have one amendment. Sir, if you are receiving any family pension, example, yes, one of my family member is expired, he is in service. Now, as an, yes, as a legal heir, I am receiving the pension. That is only the family pension. Now, out of that, 1/3 of pension or 15,000 is in case of old regime, but in new regime or in default tax regime they amended, yes, 25,000, whichever is lower. Sir, what is that amendment? Old regime same limit in new regime or in default tax regime you have to take the 25,000. 1/3 of the family pension or 15,000 or 25,000, whichever is lower, you can take it as a deduction. And next point also important, and we can use this point in DTA chapter. Remember, if any dividend income or if any mutual fund related income, if you receive, from that we can take the deduction. What is a deduction? Remember, deduction available only to the interest on loan taken for such investment. Example, I am taken one loan. From that loan only, I invested in company. From that loan only, I invested in company. So now I am receiving the dividend income. From this dividend income, example, 5 lakh we received as a dividend income. From this, can you reduce any deduction? Yes, you can reduce the deduction with respect to this loan. If you paid any interest, this interest only you can reduce as a deduction. Sir, can I take the total interest as a deduction? No, no. Yes, actually I paid interest 4 lakh, sir, but you can't take the 4 lakh. Remember, the maximum deduction cannot exceed the 20 percentage of such income. That means, yes, 4 lakh, actually we have an 4 lakh interest, or 20 percentage of such income, that is an 20% of 5 lakh, I think 1 lakh. So whichever is lower, this 1 lakh only you can take it as a deduction. So totally 4 lakh taxable under income from other source. Next, so this point you should remember in income from other sources, around 15 minutes discussion. Definitely I'm expecting one MCQ also from this. Deemed dividend, new section introduced to subsection 22 class F introduced. But on the same thing, why this new section introduced? Because of buyback amendment. What is the date we have to remember, ma? 1/10/2024. Same. Yeah, sir, students are thinking, sir, whatever amount received at the time of buyback, that isn't taxable under the head income from other sources. But you have to calculate the capital loss. We are not received any sale consideration. We received, but that is taxable under income from other sources. Now, sale consideration is nil, and cost of acquisition, if you are taken loss, you will get that loss can be set off against the any gains. But here we don't have any gain. In next year, we can do set off. Thank you. This is only with respect to the income from other sources. Don't think about any other point. Please revise these 2 points only. One amendment, because of buyback, we haven't deemed dividend. Second amendment, family pension. 1/3 of family pension or 15,000 in case of old regime. In case of new regime, we have to take 25,000. These are only amendments. Thank you. We can meet in the next session.